Good morning, everybody. This is Rebecca Imholtz, your Director of Development for the Mount Pleasant Chamber of Commerce. I'm so glad that you can join us this morning for this very important webinar, COVID-19 and Tax Planning. It will be led today, moderated by Joe Hinsky. Joe is a CPA and Managing Partner of Legree, Bailey & Hinsky, LLC in Mount Pleasant, and he serves on the Mount Pleasant Chamber Executive Board. Joe's a graduate of Charleston Southern University with a degree in business. He has a master's in accountancy from the University of Charleston, South Carolina. Joe has taught taxation at both schools at the undergraduate and graduate levels. So welcome, Joe. Thank you for leading our webinar this morning.
Yeah, thank you for having me, Rebecca. Glad to do so. I'm going to throw up here the PowerPoint slides to kind of follow along there. So going to talk a little bit about what COVID-19 economic stimulus has been happening. So there's been several bills, at least 4 different things have come out for economic stimulus. So it's how this is going to affect your tax return. And I just pulled up the wrong screen here. So let me go back and get the one that's actually live here. All right, so there's been 4 different things that have come out, and it's changing constantly. I actually got another update last night. So pretty much every day we're getting something that's changing, that's happening to keep going. So first thing I always start any presentation with is a disclaimer. Is what we're going to talk about is as everything as it stands as of right now. Again, there was a new issuance last night dealing with some of these loans for stimulus. So that could, what we talk about today could be changing as we speak. So I'm going to give you the best information we have currently, but it's, as always, it's important to kind of keep knowing that there's updates coming and more stuff coming up. Especially, we've got here the agenda, the CARES Act, the Families First Coronavirus Response Act, the FFCRA. Those 2 things added several stimulus ideas that have never been done before, and were also intended to be almost immediate. So they're having to write these rules. It's not like it's something we've done, 5 years ago, 10 years ago, even 15 years ago. So it's completely changing everything. We're having to write these rules as we go, as well as just like all of us, the IRS is all working from home as well. So, they're having issues as well. With that, we're going to talk about both individual and business changes. Most of our chamber membership are small businesses. So, anything that a business change is going to affect your individual tax answer. So we want to make sure we kind of talk about both of those. And then, of course, South Carolina has come out with some changes as well that we'll need to kind of make sure we know, and then most states have. So if you're also doing business in a different state, you need to make sure you keep abreast of that state's changes. So the biggest thing is, again, happy tax day, even though it really doesn't mean anything this year. You normally wouldn't find me doing a presentation on April 15th, but this year, the April 15th is somewhat meaningless. All tax returns that are due normally today are now due July 15th. So we've got until July 15th to both file that tax return or make a payment. So if we owe taxes on our 2019 return, we normally, if we're not paying it today, even if we extend it, we would be paying interest and penalty on late payment because taxes are due today. That now is going to be suspended until July 15th. So if you make a payment by July 15th, that normally would have been due today, you won't have any taxes due or interest or penalty in addition to those taxes due. It also applies to your 2020 first and second quarter estimated payments. So if you make quarterly estimated payments on your taxes, first quarter is due on April 15th, second quarter is typically due June 15th. Those are both going to be due now July 15th. This includes both the 1040 and the 1120 corporate tax returns. Again, if you're an S corporation or partnership, you are already due on the 15th of March. So hopefully you had already filed that return or filed an extension that would get you to September. So those are returns. It also includes South Carolina and most other states. So you don't have to worry about, oh, the South Carolina, do I have to pay South Carolina or file an extension? Those are all now due 7/15. So again, 7/15 is our new due date and also our payment date, and also our first and second quarterly payment dates. The one caution I want to throw in here is that when you think about it, again, if you're paying quarterlies, if you're going to owe 2019 and then you're going to make 2020 quarterlies, that's an awful lot of payments that are going to be due on July 15th. So it's, in some ways they gave us something, but also in some ways they took something away, and that they're going to require a whole lot of cash on 7/15. The Senate bill that didn't get passed but got changed to this had originally wanted to go right on out to October 15th, was the normal extended due date of a personal return, but that hasn't been done. That could still be changed. So these dates could still be changed. But again, I want to caution you that, you know, if you're going to just wait until July 15th, you may need a whole lot of cash on July 15th that you may or may not have yet. The other thing it did from a tax planning perspective is it extended certain other deadlines until July 15th. Typically, if you wanted to make a IRA contribution for 2019, it'd have to be made by April 15th, or an HSA, or even a South Carolina 529 plan contribution. You would make those by April 15th. Even if you extended your return, they were due on April 15th. So the good thing there is that, you know, as you're finalizing your return, if it is a good tax planning idea to make an IRA contribution or to contribute more to your HSA, you can still do that for the prior year up until that July 15th filing deadline. The next thing it did was it included these individual stimulus rebates. So again, it's a way to get money into the economy quickly. So any qualifying person, single person, gets $1,200. If you're married filing joint return, you get $2,400 plus $500 for a qualifying child. And there you see the phase outs. It starts at $75,000. It actually ends at $99,000. So if you're between $75,000 and $99,000 of adjusted gross income, then you would get something less than the $1,200. After $99,000, you don't get any stimulus payment. If you've already filed your 2019 return, they're going to base it on that income. If you haven't filed 2019, they're going to base it on your 2018 tax return income. So, you know, if you've not filed 2019 yet, then you look at 2018. If you say, oh, well, I didn't qualify, my income was too high that year, can I hurry up and do 2019 because it may be lower? No, my understanding is that they've already pulled the information from that. However, when you file your 2020 return this time next year, there will be a reconciliation. So if you got less or you didn't get any and you would qualify in 2020, you would get it as your part of your 2020 tax payments. So, you know, if you haven't filed 19, then you're looking at 18 and potentially 2020's income on whether or not you get this. Actually, last night, the IRS website did come up at irs.gov. There's a coronavirus relief tab. If you click on that, you can check your status of your stimulus payment, as well as ability to add maybe a direct deposit information if you hadn't direct deposited refunds in the past. They're going to pull the direct deposit information from your prior tax return. If you either owed or didn't have direct deposit, then they will mail a check unless you're able to update that in time. So I would encourage you to go on there at some point and check to see your status there. A couple other, again, personal changes, but that may affect ability to get cash for your business, is they've changed some retirement accounts. So if you're over 70 and a half, or actually now starting in 2020, 72, you're required to take a minimum distribution out of your IRA account every year. They've suspended that for 2020. So if you don't need or don't want to take it, you don't have to take your RMD for 2020 if you so qualify. If you've taken it already, if you're within 60 days of when you've taken it out, you can put it back and it won't be taxed. If you took it out in early January, you're beyond the 60 days. And as of right now, we don't have guidance on whether or not you can put that back. As well as if you're not 59 and a half, again, if you're 59 and a half, you can take out money out of your retirement plan without any penalty. You just pay tax on it. For now, for this year, they have waived the 10% early distribution penalty for up to $100,000 out of your retirement account. So if you have money in an IRA or retirement plan and you want to, or you need to access that cash, you can take up to $100,000 in 2020. You would pay tax on it, include it in taxable income in 2020, but you wouldn't have the 10% early distribution penalty. There are two other elections to this. Is that one is it'll allow you to spread the tax on this $100,000 over the next 3 years, or within 3 years you can put the $100,000 back into your retirement account with no deduction for it going back, but then the $100,000 you wouldn't have to pay income on that. So it'd be almost as a loan as if you're taking a loan and paying it back to yourself over the 3 years to be able to put that money back into your retirement account and shelter it from taxes. Again, this is something that's really going to affect more in terms of how the tax is calculated over 3 years, or what happens when you put it back. That's something that we'll get more guidance on during the year. It's something that they're not, is lower on their list of things to stimulate the economy right now. It's that we've got time to kind of come out with the rules for that. If you don't want to take a distribution, they did expand the retirement plan loan limit. So if your retirement plan allows for a loan, the limit used to be $50,000 or 50% of the income. Now it's going to be $100,000 regardless of the balance of the account. So as long as you have $100,000 or more in there, you could borrow up to $100,000, and then depending on the plan is going to define how you pay that back. So again, ability to withdraw money or loan money out of your retirement account to generate some cash. They threw in a couple other little changes. I just wanted to mention that, again, most people with the increased standard deduction have not been itemizing. They've added for 2020 only a new $300 above the line charitable deduction. There's no requirement that it be for any kind of COVID relief. It's just to a qualified 501c3 charity. So if you typically would give to your church and you're not itemizing, you could do this and then get to deduct $300. As well as if you were itemizing, then they limited your charitable deductions to 60% of your income. They've totally removed that limit in 2020. So you could conceivably donate all of your income and not pay any tax, as before it would have been limited. And then if you have federal student loans, the interest payments and interest are abated until 9/30 of 2020. So a federal student loan and you're making payments on, or even if it's in deferment and accruing interest, it's not going to accrue any interest from April until September 30th of this year. So again, give some relief to let people take more cash. So now we start getting into some of the business and personal issues. We have the expansion of unemployment benefits. So typically unemployment, if you lose your job, you go file for unemployment. It's based on what you were making before. If you were self-employed, you didn't qualify. Typically, if you were a business owner, you didn't qualify if you were also the employee of the business. So neither one of those qualified. Now this expansion of the unemployment benefits allows both of those people to qualify. So if your business has been shuttered because of mandatory closures, and it's not an essential business and you've had to close, and you're the owner and an S Corp and you were drawing a salary as well, you would now qualify for unemployment. If you're a sole proprietorship or an independent contractor and we're filing Schedule C, then you also now potentially could qualify for these unemployment benefits. The other thing the federal government did is it kicked in an extra $600 in benefits to the state. So you'd get what you normally would qualify for, as well as this additional amount from the federal. So, conceivably you could be making a little more money than you were making if you still had your job. It also temporarily suspends the requirement that you actively seek work. So typically, if you lose your job, file for unemployment, then you have to have so many interviews or job, applications a week. This is going to suspend that for now. So you won't, there's under the theory of there's so many people unemployed, there's nobody hiring, then there's no requirement that you actually have to do that to qualify. Typically, if you let somebody go, they go file for unemployment, the more people that file that were your employees, the higher your experience rate, the more unemployment insurance you would pay going forward. What they've done for this is as long as the people are losing their job because of the economic slowdown, it's not going to affect the employer. So now there's no penalty for the employer to have to say, hey, we've closed, we're temporarily laying everybody off. They can go all file for unemployment and it's not going to cost me anything down the road in terms of higher premiums. So again, that's a good thing to say, hey, we're not going to penalize you if you have to put your people on unemployment. A couple other from a business standpoint is in 2018, they limited your net operating loss deduction against current income to 80% of that income. So in the past, you could always offset all of your income if you had prior losses. And starting in 2018, they only limited that to 80% of your income. So you're always paying tax on at least 20%. That's been suspended retroactively until 2018. As well as 2018, there was no more carrybacks allowed. You can only carry a loss forward. So you can only carry the loss forward. So now they've reinstituted that carryback. So really what this last point is, if you had an NOL in 2018 or 2019 have already filed, then you may want to look at amending to be able to carry that loss back and generate some cash flow now by getting prior taxes paid instead of using it going forward. So it's an opportunity to go get some cash now. Although the IRS did have a release yesterday that basically any returns filed on paper are not going to get processed right now. Most NOL carrybacks are paper files, not electronic files. So I don't know if this is really going to help. I know we did get a couple questions. I'll try and kind of catch at the end because some of it may get answered as we go. 2018 also put in a loss limitation. So if you had an excess business loss, you were only able to use part of that to offset other income. That's now again been delayed, as well as if you had very high interest deductions, those were potentially limited. That's been delayed as well. So again, 2 more opportunities to maybe be able to go and file an amended return and get some prior taxes paid back now, or you file it in your current return, if that's 2019 or even 2020, and get a benefit for that going forward. Something kind of slipped in as a correction that we've been waiting on since 2018 was this depreciation of qualified improvement property. So again, this deals with real estate type improvements that normally would be a 39-year depreciation write-off. There was a benefit if it's qualified restaurant, qualified retail, or even qualified leasehold improvements. So if you owned a building and were leasing it to a third party unrelated and made some improvements for them, you would be able to use a 15-year life instead of 39. That got suspended in 2018. They've now, in this bill, gone back and corrected that so that it would be able to use the shorter life, as well as eligible for bonus and 179 depreciation immediate write-offs in the year done instead of over the useful life. Again, this is something you've made, if you've got it in 18 or 19, you may want to amend, or you may just want to correct it. Since it is a depreciation change, we can correct it on the next return and shorten the life from the 39 to the 15 and catch up that depreciation over the shorter life. So again, if you think that may qualify, you may want to talk to your accountant to kind of get into that. All right, the other thing, big thing, and this is the newest part and probably getting the most publicity except for the stimulus checks, are these business loans. So it really added 2 new business loans, or I guess added one and expanded another one. So there's the Paycheck Protection Loan, what we'll call the PPP loan. And then there's the SBA Economic Injury Disaster Loan. So it's the EIDL. So those are the 2 loans. In addition to that, they added some payroll tax credits and tax deferrals for both federal, and then South Carolina has also allowed the payments deferred. So we're going to go into a little more detail about each of these now. Paycheck Protection Loan, which the other thing I do want to mention, if you haven't done this and you're really thinking about it, tomorrow at 10 is another webinar that the Chamber's putting on through the SBA, where it's really going to walk through this process and requirements and all in much more detail than we're going to touch on. So if it sounds like something of, ooh, I kind of heard about that, maybe want to do it, not sure I should, not sure I qualify, then tomorrow at 10 is another one of these webinars through the Chamber. You can go there to sign up. That's going to go in a lot more detail. So what is the Paycheck Protection Loan? It's made by the SBA through a bank or qualified lender. So this isn't the SBA doing the loan, this is really your bank. So the first thing you're gonna do is talk to your current business bank, if you're interested in do that. It really covers costs from February 15th until June 30th, 2020. And eligible businesses generally include less than 500 employees, a sole proprietorship or independent contractor, as well as 501c3 charities. So a charity could apply for this. It does include some businesses that have more than 500 employees. An example of that might be a restaurant that has multiple locations and all their locations together are more than 5, as long as each location is less than 5. We've also seen it with some hotels and some certain other businesses on what does. But again, that's going to qualify most businesses, especially here in Charleston. It's a formula calculation. So there's no, in terms of, having to issue or having to submit 3 years of tax returns and personal financial statements and, projections. None of that would normally be a typical business loan. None of that's going to be in this Paycheck Protection Loan. Basically, it's going to be on payroll. So you're going to submit payroll tax returns from 2019. They're going to take your average 2019 monthly payroll cost and multiply that by 2.5, and that's your eligible loan. So what's the average monthly payroll cost? So it's your gross payroll. So it's before any withhold, it's not net payroll, what net check the employee gets, it's their gross pay, a limit of 100,000 of gross pay per employee. To that, you add in any health insurance the company pays for, any retirement plan contributions the company paid in 2019, the state unemployment premiums paid in 2019. And then if you're a sole proprietorship or a partnership, your self-employment income from 2019 from that business. It's going to add all those up for the year, divide by 12, multiply by 2.5, and that's how it's going to come up with your loan average or the loan amount that you'd qualify for. What, say, okay, well, it's a loan. In these uncertain times, do I really want to take on more debt? A couple of things with this loan is once you're approved, and what we've been told is that basically from when everything's submitted and reviewed, it's a 10-day process to get the document signed and have the money for the loan to kind of kick in. So about 10 days from that. The benefit is once you get that money, you start an 8-week clock. During those 8 weeks, the payroll costs, these qualified expenses listed here, payroll, the health insurance and retirement contributions for that time, the state unemployment for those 8 weeks, as well as your rent or mortgage for the business. This is the business, so if the business owns its property, the mortgage payments or the rent for that property, the utilities on that property. You'd add up all of those costs for the 8 weeks, And then as long as you have the same number of employees that you had on February 15th by the end of this 8 weeks, then that amount of the loan can be forgiven. So so you say, okay, well, I really had, during those 8 weeks, I did spend all the money on payroll, health insurance, retirement, rent, and utilities. There's a self-certification at the end of the 8 weeks that you would say, here's what I spent the money on. Here's the total. We spent more than that. Here's the number of employees we have versus what we started with. Then the loan will actually be forgiven and will not need to be paid back, including any interest or fees. The fees are paid out of the loan, so there's no fee to kind of get the loan. It's part of the loan. If for some reason, let's say you drop and you had, instead of 10 employees, you only have 9, then basically 90% of that loan can be forgiven if you've spent the qualifying expenses on the total amount. The remainder 10% would roll into a loan that would need to be paid back, but 90% of it would be forgiven. So it's a great opportunity. And again, the theory behind this is that you're keeping your employees on payroll, full payroll. They're still working, even if they're not maybe able to do as much or you're not making as much. It's kind of paying for those employees so that you're keeping them on the payroll and out of the unemployment system. So as I mentioned, the self-certification of these qualified expenses at the end of the 8 weeks, the portion that's not forgiven then basically converts to a 2-year loan at a 1% interest rate. So again, even if it's that, oh, well, we didn't quite make it and we still got a little bit to pay back, it's over 2 years at a 1% interest rate. One thing, we're going to talk about these payroll credits in a minute. If we get the loan, we can't get the payroll credit. So we can't combine these couple of incentives, because in theory, the loan forgiveness is going to allow us to basically not basically cover those payroll costs for that time period. The big issue there is okay, well, with these, we'll talk about the credits in a minute, but if I don't have employees, should I still get the loan? So if it's based on 2019 employees, I've already laid everybody off. Should I go get them? I don't know when we're going to be, reopened. I don't know when I'm going to hire these people back. The general advice is we go ahead and apply for it, see what you get. If you get approved, then okay, then that's when my 8 weeks would start. Can I look out and think that we'll be back in 8 weeks? As well as what, the other theory is, if you've already laid everybody off and this allows you to bring them back, it gives them time to kind of get back into it, get back up to speed. If you're doing some background work or some updating, you can kind of get ready. So as the clients and customers start coming back, you're all ready to go and everything's in place. I think I saw a question specifically on this. So I'm going to go ahead and answer this one because it's specific to the PPP. If you pay the same number of employees for 8 weeks, but in week 9 you lay everybody off because you haven't work resumed, will the loan be forgiven? So for that one, I'll answer that to say that the intent, they're going to also look at intent. So if everybody's on the payroll, you get the loan, you pay everybody, it's 8 weeks later, for some reason you still haven't opened back up, or maybe you have opened back up and business hasn't returned like you thought it would, and you need to let people go, that wouldn't necessarily affect the loan forgiveness. So as long as the intent was you were keeping all these people on, you paid them during the 8 weeks, you had every intention of operating at the same level, and then things just didn't come back, then I think that would still qualify for the forgiveness, because at the end of 8 weeks, you'd still have them on the payroll. So hopefully that kind of answers that one. Again, that may come out and have that, oh, that's not really what they could change some rules to say, no, that's not kind of what we intended. We're going to kind of keep that going. All right, so that's the PPP loan. That's the one getting the most publicity. There was a, again, a planning idea early on was maybe not to apply for the PPP loan yet, because once you get approved and take the money, it starts your 8 weeks. So if you wait a couple weeks, we may be closer to kind of getting back to full strength. There was a set amount of money for this program. Yesterday morning, I saw that they've allocated over 75% of the funds already to approved loans or loans in the process of being approved, so that the money is potentially running out, but there's already talk of adding more to it and not putting a restriction on it. So, you know, if you haven't applied and have kind of been waiting, I don't know how much longer I'd wait. You know, with the intention of it may not be an option if you wait too much longer. All right, let's move briefly to the economic injury disaster loan. So this loan's been an SBA loan for a long time. Typically, this is what kind of kicks in after a hurricane or earthquake or other, you know, natural disaster. California wildfires were able to access some of these loans. So typically, this loan would be of, we've had a tornado or, you know, a hurricane, we've had disaster, we're going to access this money. It's a low interest rate, it's a long-term payback. So it's just a way to kind of get some money. One of the first things done when everything shut down was President declared that the whole nation was an economic disaster and qualified for this loan. So, you know, immediately right away it was apply for this loan. It'll get you some money. It's a relatively quick and easy process. Within 3 days, they suspended that process because it was a typical loan. It was just through the SBA, not through a bank. So they were still requiring 3 years of tax returns, personal financial statements, personal guarantees, all the stuff that you may not be willing to do at this point or may take a lot of time to do. So within 3 days, they turned that off. They've basically created a much shorter process. There's the website there. You apply online through the SBA. So this, unlike the PPP, is not through your bank. It's through the SBA. So you apply there. Typically takes less than 5 minutes to fill this out. It asks for 2 financial questions: your gross revenue from the prior year and your cost of goods sold from the prior year. Everything else is personal financial. The only other thing they do is pull the owner's credit report to look at their credit score. If they're credit worthy, then they would conceivably qualify for the loan. The benefit of this is that they added a $10,000 grant. So the first thing you said, grant, again, grant is not a loan. A grant is free money. You don't have to pay it back. So basically, if you apply, they deem you qualify, you're eligible for up to $10,000 right off the top. During the application, you enter your business bank account information, and they would direct deposit that grant directly into your bank. Reportedly within 3 days, although we're seeing now it's taking about 7 to 10 days to get that. But we have started seeing the grants come in. There was no really definition of what that grant would be determined on. It just said 10,000. The guidance we received yesterday was that it was basically $1,000 per employee up to the 10,000. So if you had 5 employees, you were getting $5,000 deposited into your business bank account once this process went through. The last point there, we can't have the PPP and the EIDL, and that's not the grant portion, that's the loan portion. So what we think we're going to see is that we're not going to see any economic injury loans, only the grant portion of it. Because the SBA, you can only have one of these outstanding. So if you had already received the EIDL loan and applied for the PPP, they would take the EIDL loan and roll it into the PPP, and then you would only get the difference if the PPP was going to be greater. So there you see other than the $10,000 grant piece, it's not as a big business cash flow benefit as originally thought out. And this was one that was in that Family First Coronavirus Response Act, and the CARES Act came out 3 days later and replaced a lot of that the PPP loan was in the CARES Act. This was in the original Coronavirus Response Act. So that's kind of why that's kind of there. All right, so those are the two loans that are out there. There's also an employee retention credit. So if you're under a government ordered shutdown or a significant reduction in gross receipts, then you can get this employee, and you keep your employees on the payroll, then you can get this employee retention credit as a payroll tax credit against your employer payroll taxes. So it's a credit of 50% of wages up to $10,000 of wages. So it'd be up to $5,000 credit per employees for any quarters that are covered under the government shutdown or significant reduction in gross receipts. So government shutdown, we see a government shutdown is, yes, we've had a government shutdown. The guidance we have right now is if you're an essential business or essential service, then the government shutdown would not apply to you. You'd have to be a significant reduction in gross receipts. Significant reduction in gross receipts is defined as a greater than 50% drop in gross revenue from a quarter-to-quarter basis from 2019 to 2020. So you'd have to look at your quarters there to see if you had that significant reduction. If you weren't under the shutdown, then you would be able to take these payroll tax credits for every month until you reach the maximum of $5,000 per employee, an employee by employee, or until your revenue exceeded 80% of the prior year's month to kind of win your back. So it doesn't have to stay below 50. Once it drops below 50, it's a significant reduction until you're back up above 80% there. If you get the PPP funding, you can't do this credit. So again, this is just 50% of the wages to cover payroll taxes, the employer payroll taxes. Doesn't, whereas the PPP funding can offset the total payroll there. There's also the FFCRA payroll credit, which covers if you're paying employees under the sick and family leave pay. So this is wages between April 1st and December 31st of 20. If you're paying out sick or family leave wages, so in other words, they could work, but they're not able to work because they're either sick or they're under quarantine or they have children at home and schools and daycares are closed and they have to take care of them, then it would qualify for family leave pay. And then depending on how they qualify depends on what you have to pay them. And then that depends on what credit you get. You think of, oh, well, family leave pay, that was always if I had more than 50 employees and I don't have to worry about that. The Coronavirus Response Act changed those limits so that if you have employees now and they're working, let's say you're still open, they're still working, you're still paying them, somebody does get sick. And it doesn't even have to be with coronavirus. They could just get sick, get the flu. Typically, then they wouldn't be able to work and you would still have to continue to pay them under the family medical leave and sick leave policies. So, if you've got employees and you're still open and you're still paying them and somebody gets sick, you definitely want to remember that as of right now, this does apply to you, even though you typically would have been exempt as a small employer. All right, before we get the payroll tax deferral, I'm going to see, I think there's a couple of questions about these credits and loans. There was a question about somebody applied for the EIDL April 1st and hasn't received anything back. I will tell you that I talked to 2 clients yesterday that got deposits. They had applied about 10 days ago. So I think April 1st, you're kind of still in the waiting period. So necessarily wouldn't have gotten anything yet. I will tell you, our business applied for it. I got my email yesterday that said that, we had been approved for the grant portion, and then it would be direct deposited the following day. So I would say right now, until you're probably, let's see, the first, though, you're already 2 weeks. So I think there you may want to go back and look and see, because you should have gotten something probably about now if it was April 1st. So the only thing I'd add that is I'd want to make sure you did the short version and it didn't go into pages and pages of information and documentation, because that would have been applying under the old act. But I think that was updated by then. Something I meant to mention here and didn't, so I'll answer this one now, about how the PPP will be taxed. It's a very good question. The answer, or the only answer we have right now, is that it is not considered forgiveness of debt. So typically, if you have a loan that's forgiven and forgivable debt, it's income when it's forgiven. So right now we know that's not the case, that it won't be forgiveness of debt. There is another area of the code that basically disallows any deduction if it's been offset by non-taxable income. So right now the guidance is, we do believe that if the expenses you're using to offset the loan, you won't be able to deduct on the 2020 tax return. So there'll be an adjustment for deductions because they were covered by this. So again, in this case, if you're open back up and you make $100 on that employee and you paid them $50 and you have $50 forgiven of the loan, typically you'd have $50 in net income, the 100 minus the 50 of expenses. The PPP is offsetting that 50. So there you wouldn't be able to deduct the 50. You've got $100 of taxable profit, and you had 150 of cash, 100 from the client, 50 from the government. So I don't think it's going to hurt you by having that. But I don't think you'll be able to deduct those costs that you're using to offset that. I do know the SCPA, which is the National Organization of Certified Public Accountants, has already asked the IRS for guidance on this issue and said that they would issue guidance shortly on how to treat both the money that's forgiven as well as the expenses that you're using. So I think that answer we'll know within probably the next 30 to 60 days. All right, the other thing, again, we talked about a lot of the stimulus is to try and conserve cash during times businesses are operating. So the employer part of Social Security, so you're still paying employees now. The employer tax, so Social Security and Medicare that the employer is paying on behalf of the employee can now be deferred. So, you pay your employee, you withhold their Social Security and Medicare, you have to turn that over to the government as well as the company's portion. The company's portion can now be deferred with 50% of it due by December 31st of 2021 and 50% by 12/31 of 2022. And this would be any employer Social Security taxes for the rest of this calendar year. As it stands now, you would be able to kind of hold back and do that. I know payroll companies, if you're using a payroll service, they're already changing their system and allowing you to determine whether or not you want to have them do this. It may change some of your contracts with them because typically they take out all that money out of your bank account, and when it's time to remit it, they remit it. So you may be transferring some of that liability to yourself from the payroll company, but it's definitely something you may want to look into, again, to conserve cash, even if you're just putting that into another account that the company has to kind of use it as a kind of a fail-safe to say, I've got the money there. If I really need it, I'll use it, but it's there. If I don't need it, then I can go ahead and pay it. Again, if you're getting the PPP loan, this can't be used. And with all of these now, so again, the PPP loan is going to only cover 8 weeks. So what happens on week 9? Can I stop paying my employer Social Security taxes on week 9 because the PPP loan is now done with and no longer in effect? And we don't have guidance on that either. So As of right now, if you're getting the PPP, I would continue to pay those payroll tax deposits until there's more guidance on whether once your period stops, can you defer your own taxes. If you're self-employed, this would cover your SE taxes. So again, you're self-employed, you're paying income and Social Security and Medicare taxes on your net self-employment income. You would be able to potentially delay those payments until 12/31/2021 and 12/31/2022. We don't have guidance on that, on how that's specifically going to work yet, because really those wouldn't be due until your estimated tax payments, which are now July 15th. So I think by July 15th, we'll have kind of more answers on what do you do with that. If I'm self-employed and paying self-employment taxes, can I delay this and how does that happen? Or what's the procedure or process there? Last thing to talk about is South Carolina. South Carolina, maybe one of the few times, was kind of ahead of the curve and issued some relief before the federal government even did. So again, they originally had delayed their tax filing and due dates until June 1st. They've now changed that again to coincide with the government. So your personal income tax return and payments, including your quarterly estimates for 2020, aren't due until July 15th. But they did also delay some business filings. So any return or payment due April 1st to June 1st now isn't due until June 1st. So that's payroll withholding. So again, if you're paying employees, you're withholding their payroll taxes. Normally you would be submitting that with payroll. You could hold that money until June 1st. Again, the PPP loan is only federal. So conceivably, this would allow you to, even if you're getting the PPP, to hold back the South Carolina payroll taxes. Sales and use tax. So if you're collecting sales tax or paying use tax, you wouldn't normally would have to do that by the 20th of the month. Now you would have until June 1st to do your April and May sales tax returns and remit those, including accommodations tax. So again, a restaurant, you're only open for maybe takeout and delivery. Your sales are maybe 10 to 15% of what they were. You're still collecting those sales and accommodation taxes, but now you would be able to hold that money until June 1st to kind of give some cash flow relief to that business for them. So again, those aren't due until then. Their last slide is my information. Again, you could submit, if there's something, we're going to answer some questions now, but if something you maybe weren't comfortable asking live, that you just want to send an email or give me a call and ask that, feel free to do that. Something you think of, say, oh, well, heard this, or you go back and talk to your accountant or tax preparer and say, hey, I watched this webinar, you mentioned this, and there's some confusion there. Feel free to follow back up, and I'll answer it the best I can. Again, it's kind of hard to answer tax questions without knowing all the details, because tax is a lot of, here's the general rule, and then here's 70 exceptions. But generally we can kind of go through and kind of answer that. All right, let me get back to questions. All right, we had a question again for the sites to check on the stimulus check. So that if you just go to irs.gov, and I'm kind of pulling it up now on the side, then there's one of the top things is a Corona, says get info on economic impact payments. So you click on that, and then it'll go through, say, here's kind of some general information to see if you qualify. Click here, and you'll need your prior year tax return. And it's going to ask you some questions to basically verify your identity based on tax return information to be able to check on that. They did say if I think it's if you're not been you've not been paid yet, and you're in the next batch, they're rolling this out in batches. I do know that several people ended up getting it yesterday and on Monday, direct deposited in bank account. I don't think anybody's gotten a paper check yet, but those were sent to be sent out. But the direct deposits are showing up in there. the code, at least the one they sent me, was Bank of America, and it said something like U.S. government stimulus deposit. So, you know, that's to check for that. If they don't have, there's a chance there also to verify on that site, to verify your information so that you can see if it's being direct deposited, or it'll give you the information on where it's going or that. Another question was, does the state portion of unemployment count against your rate? The state portion of unemployment count against, no. So I think what they're asking is, as the state is going to determine what you qualify for, the federal part's on top. The state portion is not going to then count as or count against you in the future as a business or individually. So either way, it's not going to harm the individual or the business if they file for unemployment. You know, at some point in the future, things get back and you just lay somebody off, or, you know, they collect unemployment, it's not going to hurt your future ability to collect. Another question, how is the $10,000 grant going to be treated for tax purposes? That's a good one. It's similar to the PPP, is what we've been told is not taxable income. And it's the other thing is, it's supposedly not offsetting any specific expenses. So the answer right now is that it's not income, and you don't have to reduce deductions by it. So it's basically a tax-free $10,000 grant. So again, that's as of right now. That could change as we get more guidance and they kind of solidify. So most of what we have is basically in the law that passed Congress. So now what happens is that goes to the IRS to write specific rules, either through the IRS or through the Treasury Department. So the guidance we've got now is that that is a grant, which is not an offset of expenses or taxable income. So it would be a tax-free that. A question was about a single owner LLC that has all 1099 income that flows to the personal return. I kind of missed where this was asked about, at what point. So a couple things. A single owner LLC now qualifies for the unemployment. So if you've had 1099s, they would want copies of those 1099s from last year, as well as the Schedule C if you have it, to determine how your unemployment is based. So yes, you would qualify for unemployment. Second thing, yes, you would qualify to apply for the PPP, even if you had no other employees, just the single owner of the LLC would potentially qualify on their profit from the prior year. So you look at your 2019 Schedule C net profit, that then is what's going to be subject to the self-employment tax, and they would take that, again, a monthly average of that number, as well as if you did any retirement contributions and self-employed health insurance. They would take that, divided by 12, multiply by the 2.5 times, that would be your eligible amount for the PPP. You would also qualify for the EIDL grant. Now, based on what we have now, that may only be that you're getting the $1,000 if you've had no employees, because they're basing it per employee, or at least the guidance we have is they're basing it per employee. So if you had no employees and it was just you as the self-employed, then you would only get that. Again, we talked about some of the payroll tax credits that as a self-employed 1099 you would qualify for as well. Follow-up question about the unemployment was, does it impact the annual rate paid for state unemployment if they do? And as long as the employee or employer is, when they file, are saying it's due to a COVID-19 shutdown or slowdown, then it's not going to affect the employer's rate going forward. So again, typically somebody files for unemployment, it hurts the company because they have a higher rate to pay in the future because they've had more people apply. But now, as long as they're that, and one of the questions is, were you reduced hours or let go due to COVID-19 slowdown, as long as they're answering that question yes, which they should, because if they don't qualify for the additional federal money. So yes, as long as they're doing that, then it would not hurt you to, it would not hurt the company to kind of pay that unemployment. That was all the questions posted. I know we ran through a whole lot of information in a very short time. Hope it was beneficial. Again, if you have follow-up questions, feel free. There's my information again on there to contact us. You know, to close out, thank you all for participating. I want to thank Rebecca and the Chamber for setting this up. I want to encourage everybody to keep checking the Chamber page, because they're, you know, like I said, there's a great one tomorrow that I'm going to sit in myself because I think I can pick something up from it about the SBA loans. You know, so keep doing that. We're trying to add stuff as fast as we can that, you know, that our people are asking for. As well as if there's something you think of, hey, this would be a great topic, we really need it, you know, let the Chamber know, and, you know, we'll see if we can find somebody to do it and get the information out there. Thanks again.
Thank you so much, Joe. Thanks everybody for participating. Like Joe mentioned, go to our website. We are going to be posting this webinar on our coronavirus resource page. We're archiving all the webinars so that if you want to go back and view it again or recommend it to somebody, we encourage you to do so. Look forward to hopefully seeing some of you tomorrow virtually at the 10 a.m. webinar with the SBA, as well as a 3:30 webinar tomorrow. How do you market both social and video media during a global crisis? So thanks everybody. Thanks Joe Hinsky once again with Legree, Bailey and Hinsky, a CPA, for doing such a great job with today's webinar. I learned a lot. Thank you very much. Everybody take care.